Model 3. I've put the down. I got to go to Miami or have someone go to Miami for me because I'm not going to be here next week to go grab that. But if you do if you look at the cost of the paperwork, the cost of, the $250 down payment, for 3 years, you get a car for $14,500. And don't get me wrong, this is not the top of the line. It's definitely near the bottom
also
end of their
depends
stack.
on the full self-driving feature, which
Yes,
is $90 a month. Mm-hmm.
Yes, if you decide to do that, but I know myself, I'm not going to have it on every month. So you can put an allowance in there. But in my mind, I'm making a bet that this car, because the premium rear-wheel drive Model 3s go for $44,000, $45,000 new, depending on what options you get. I'm making a bet that after 3 years of use, it's going to be worth less than $30,000. And I think that makes sense. I could buy it out at the end of the lease for a lower amount. It's funny because I've never leased a car before. I've always opted to either finance them or buy them outright.
Right.
But when you talk about cars that are depreciating at the rate they're depreciating, and my payment, Alvaro, is going to be $310 a month, or $311.
On the Tesla, right? Without FSD, right? No,
without FSD, but I am including the $10 a month that goes into the premium connectivity.
Okay, $12, correct. Mm-hmm.
It's
so
like
you can have
it's
YouTube
it's
and
10
Netflix.
for me. It's 10 for me. So
Okay,
I don't know.
I'm paying
But
$12.
Yeah.
Okay.
So yeah,
Sounds like a good deal, man. I mean, I love my vehicle. I don't like the stock. I think Tesla is a bubble.
No, Tesla. Come on, Alvaro.
It's a bubble.
Come around. It's the future.
I love my vehicle. I've been a loyal Tesla customer since 4 years ago, I think, and so far so good, man. No complaints about the curb. I mean, the full self-driving, it's assisted, so.
Well, hold on. The reason I did it, actually, shout out to my friend Jacobo out there in Miami. Mm-hmm. He brought his over and put on the full self-driving. It drove itself. I mean, don't get me wrong.
No, my vehicle drives itself, but it's assisted. So I need to put my hands on the wheel.
This isn't what he did. He hands off the wheel.
And the vehicle, was driving itself all over the place for longer than 5 minutes?
Yeah, no, we literally did an entire weekend in Naples where the car drove itself. We had no problems.
North Carolina are more strict than in Florida. I don't know. Maybe that is a reason.
Jacobo admitted this
for the most part.
Jacobo admitted this to me. He's tried to do the full self-driving in Miami, and in Miami traffic, it just doesn't work as well as you would want it to. Mm-hmm. But in Naples, where you basically, I don't know if you've been to Naples, but it's a grid. It's just a bunch of straight lines in every direction. It's not a hard place to drive. People that are in Southwest Florida are going to laugh at that because there's a lot of crazy drivers on the road. But it's not Miami traffic. I don't know I've never driven through Charlotte, so I don't know what the traffic situation is like there or how the layout of the roads are.
Nothing like Miami, that's for sure.
Well, I would just say that Naples was again, I think the value of full self-driving depends on how much you are going to drive personally or how much driving you have to do, and two, where you're located. Like in Naples, if you had to rank difficulties 1 through 5 of autonomous driving, I feel like Naples would be 1. I can't picture an easier area for a full self-driving car with cameras to figure that out. Charlotte's probably in the middle. And then you have places like Miami and New York that are 4 or 5.
Yeah, I still believe, and I can say this because I'm a customer, that, it isn't 100% ready yet. We have a lot of railroads here in Charlotte. Every single time that my vehicle goes over a railroad, the full self-driving gets disconnected. So there are still some things that...
That's odd, man.
Yeah,
well, either way, I'm now going to live the experiment, and if I like it, I might end up taking a small flyer in the stock.
If you like fast
own
cars, you will love it. My vehicle is so fast, man. Unbelievable.
Dude, the Mach-E can go fast. The electric cars, 0 to 60, you could beat any... Yeah. I won't say any. I'll say 90% of gas cars off the line.
Most internal combustion vehicles, I give you that.
Yeah,
I love my car. And again, I don't mistaken a company that makes a product that I like with the stock of the company, which is a mistake that many people make, right? But Tesla is pretty much trading at all-time highs, so price action looks favorable.
No, I want to be clear.
We're in a very weird situation, bro. So the markets are freaking out about AI and valuations and a potential AI bubble. And as of now, the best looking technical chart within the Magnificent Seven is Tesla, which is pretty much trading at all-time highs, which is by far the most expensive stock inside the Magnificent Seven group. So it's kind of a weird situation, the one that is going on.
It's an exception to the general rule of valuations being a concern right now.
I mean, it's all about the future, right? So Tesla is the future.
That's the point I want to make.
Of the company.
When I say take a flyer out on Tesla, I like to own the stocks of companies that I use on a daily basis just as a matter of principle. It doesn't mean that I always do it. It's not always a good idea. And I wouldn't do it for Tesla because I like the car. I would do it because of the potential future in robotics and the present that is battery storage. Their battery storage business is very impressive. I hadn't taken the time to really look into it until recently.
5% of the total revenue that the company makes.
It's not driving anything. I'm just making the point
this is a car manufacturer as of now. That situation could change later on down the road, but this is a car manufacturer. Period. Full stop. And
well, think about it this way.
The Tesla haters, go ahead, drop a comment.
Let me.
I'm already accustomed to it.
Let me push back a little bit against that. Just a little bit, not much. We get really excited about companies that have a subscription model. And even though you don't need to get the $10 a month connectivity for your Tesla or the $100 a month, I'm sure these prices range a little bit based on your location for the full self-driving. This is a subscription. And if you have a subscription model that dominates your base, Wall Street has shown it's willing to give you a much higher valuation. Now, don't get me wrong. Tesla has an insane valuation.
237 times forward earnings. I cannot wrap my head. I cannot wrap my head around this valuation. You
have to believe that they are going to get Optimus humanoid robots correctly and monetize it relatively quickly, and not just quickly, but before anyone else. Because they do. I think that valuation has to imply that they're pricing in some sort of first mover advantage.
Yeah. So the current valuation is pricing in a company that will be absolutely dominant technology-wise 5 years out. So I mean that's what the valuation is pricing in. It's priced to absolute perfection, and I don't think that is going to be the case. And again, I am a customer, so I own a vehicle.
At an all-time high, it's hard to argue against the fact that there's a lot of good priced in. I'm not disputing that at all.
Yeah, sure.
I would just say this: as someone who's driven competitor EVs, gone inside of a handful of other ones, Tesla is right now at least a generation or two ahead, and I don't trust Ford or GM or any legacy automaker to catch up or get it right. If you want to make the case that Lucid, that's backed by the Saudi Arabian trust or Saudi Arabian sovereign fund, or Rivian, which has a huge backer on Amazon, are going to compete and get it right, and maybe they're better value if you want to invest in electric vehicles, I'm willing to hear that argument. But right now, the Tesla experience, even like going to a dealership, I don't even know what you call them, not really dealerships, going out to test them, talking with people, it's one of the best consumer experiences I've ever had, full stop. And if you stack it next to buying a car, it's light years above anything else.
Okay, so total revenue on Q3 of this year. Automotive, $21.2 billion. Energy, $3.4 billion. And services and other, which for the most part is revenue that comes from the automotive business, $3.4 billion. So this is a car manufacturer. I'm sorry, bro.
No, I'm not saying it's not. Okay. I'm not saying it's not.
And don't get me wrong. My vehicle is a computer on wheels. I get it. It's a tech product. But yet still, we're talking about a car company that is dealing with typical situations of a car manufacturer.
But I think the point I'm trying to make here is not that they're not a car manufacturing company. It's that they're a car manufacturer. No. I'm not even talking about the future. I'm just saying you can't look at this and say, well, it's going to eventually have a Ford, GM, or whatever the other one is, or Toyota. Multiple. None of the other auto manufacturers have a customer that's willing to spend $100 a month to have full self-driving. There is a component to Tesla's automotive business that is superior to other people's, and it has nothing to do with car sales. It has everything to do with a consumer base that is willing to, even if they own the car outright, pay $100 or $110 if you include the connectivity thing to keep their car in the state that it's in when they got it, because the service is that good. And I'm here to tell you, I think the service is that good.
So get this, bro. Toyota,
Yeah.
like a typical car manufacturer. What do you think the profit margin of Toyota looks like?
Oh, it's
as of
thin.
now?
Thin.
But
Maybe 5%.
7.5%. Do you know what the profit margin of Tesla looks like as of now?
Oh, it's fat, isn't it?
4%.
Oh, really? So it's come down. It's come down. Okay, it's
I
come
can share
down.
the screen with you if you want to.
Dude, I
It's a
believe you.
freaking car manufacturer. I mean,
I believe
Jesus
you.
Christ.
I mean, listen, dude.
So
but
here's
Amazon.
the deal, Dan. When the
Yeah.
company was growing like super quickly, at a very fast pace back in 2020, 2021, I became a shareholder. So I was not only a customer, but also I was actually a shareholder before becoming a customer. And I ended up having 100 shares, or as of now, still have 100 shares at an average price of, my average price has to be at around $95.
Yeah.
But I never, added more to the position because the valuation. So, revenue growth started to slow down and stuff. So, I am actually a shareholder of Tesla, but I am not a buyer at these levels, and I don't believe that this story will turn around very quickly in the near future. Let's just put it that way. So,
What do you mean turn around? The story has to be going well. The stock's at an all-time high.
say 60%, 70% of the total revenue of Tesla comes from a segment of the business other than car sales. That's what I'm saying. So Tesla finally becoming a tech company, which isn't the case as of now.
Yes, the point I'm making, though, is you pay a higher multiple for companies that have subscription revenue. You just do. Toyota...
Yeah, but come on, down to 135 times forward earnings. I mean...
I'm not saying it's overvalued or undervalued, Alvaro.
I mean, what other company
can
can you name about service
that's doing what?
revenue? Apple trades at 32 times forward earnings.
I know, Alvaro. I think but here's the thing, though. If you knew that Apple was eventually going to get to the place that it is today, you would pay 200 times forward. It's a bet that they're going to have and here's the thing. This is just in the context of having a subscription-based, service-based revenue model. If you
we have people struggling.
Hold on. If you bet
Okay.
that people are going to buy Teslas and then get attached to them the way that people have their iPhones, and I think you could eventually get to eventually the earnings would catch up, and it wouldn't be 230 times the service revenue or whatever it is. It would be much lower. You have to have an imagination for this, and I'm not saying you're wrong, and I'm not saying it's right now. I'm just saying the market clearly has some faith that this bet is going to make it work.
I could be mistaken. I mean, I already own 100 shares at $95 or something like that. So if Tesla goes to $950, which is Deniv's price target for 2026, for late 2026, then I'm okay. I mean, I'm good with it. It's okay.
Oh, dude. Let me be very clear to anyone listening. I would not buy this today. That's not the point I'm making.
Yeah, so
the point
we're on
I'm
the same
making,
page,
the point I'm making.
You see what I'm saying? So you're buying
yes,
a car.
Yeah.
Under no circumstances buying the stock. So that we're
not right now. Not right now.
Correct.
I guess the point I'm making is I'll put it this way: before getting the car and before having the experience, I didn't understand the fascination. After experiencing the product, and with my optimistic imagination as a bull in a bull market and an understanding of how technology can take hold, I could now see the path of everyone gets a Tesla and everyone's paying Tesla $100 a month to start. And that price is going to go up eventually, And I guess the point I'm trying to make is I see the path for this to become a real... I see the path for the stock to grow into the valuation, whereas before I did not.
You need the company to become a robotics company.
Yes.
You
need the service revenue to pick up. You need a time. Like before, I didn't get it. I just didn't get. I didn't understand. I didn't see the path. I didn't have the imagination to see the path, and now I have an imagination to see the path.
Yeah. So I have a last fun
Yes,
fact
go
for
for
you. Let me share my screen before. I don't know if you want to start the
We've started. Don't worry. Go ahead.
we're okay. So we're already on it. So let me show you this. Get this. So, okay. Am I sharing my screen now? So hold, because I am out of my
I
studio.
don't think you are yet, but
no, I'm not. Let me do it. I should be sharing my screen like right away. Let me see. Sure. There you go. Can you see this?
Beautiful. Yep.
Did you see this?
Yeah, dude. Yeah.
Robotaxi weekly rides. So Waymo on Q3 of this year, 450,000.
Fun.
Robotaxi
That's cool.
weekly rides. Okay.
Yep.
Tesla, 0.
Hey man, if they could just do one, infinite growth.
0.
Low base.
0 robotaxi weekly rides. So I think that the markets are being too enthusiastic, and that's it. I mean the show looks good. Don't get me wrong. The show looks very good.
No. All right. I don't think you're hearing me. This is not about robotaxi. This is not about robotaxi. This is about people with their own cars paying $100 a month, and then eventually, if Teslas can become more commonplace, you'll have a multi-million car, or maybe even more than that if you have more than one, Tesla in a household. That's pie in the sky shit. But if you have people that are paying $100 a month with their car and they get used to it, there's no other product on the market that's even close. That you get the Apple argument is what I'm trying to get to.
Yeah, I mean, according to Dan Ives, best case scenario, or his best case scenario, I guess, is that 50% of Tesla owners would be signing up for the full self-driving feature.
That's fair. Yeah.
So
sure.
And he's a super bull. Go figure.
And here's the thing,
someone was asking today in the Discord about the technical chart, and they were asking like, "Hey, what happens here if Tesla bursts above $490?"
It goes to 1,000.
I don't know.
Just kidding.
No. But it's possible. Take a look at this technical chart.
No. Yeah,
This is
we're
a
on
very
all-time.
good-looking chart above all the
all-time
moving
high.
averages. We have a rising 5 DMA, 5-day moving average above the 20, the 50, the 100. So Tesla bursts above the brand new all-time highs for $195. I mean, 500, 510, 520. I don't know. You can set the price you want. The stock goes higher. This is a very good-looking chart. Period. Full stop. So the net aggregate opinion of the markets is saying that I am mistaken as of now, and that Tesla is the future, bro. So we'll see what happens at the end of the day. Yeah, I mean,
I guess what I'm trying to say is I can
argue with this technical chart, bro.
This is not meant to be an inducement to buy the shares. I'm not buying the shares here. I'm just making the point that after having now seen the product, I can no longer make the argument that the path isn't there.
Okay.
And I think you were maybe about to say that it's unaffordable for most people, and I am conscious of the current economic climate in the country. But the lease payment on a mid-level Model 3 right now, I mean, during this promotional deal that I think literally ends at midnight, it's $300 a month. You can't get a better lease for that kind. You can't get a better lease than that.
Yeah,
it's a fantastic deal. It's a fantastic deal if you can get it. So, who knows? Maybe when the incentives go away, you feel a lot differently about it, and that's totally fair too. But this has been the longest cold open ever, and it's a great. It is a great segue.
It was a good discussion. Yeah,
it was a good discussion.
Welcome to the Tesla Owners Club. Yeah.
The Tesla Owners Club pre-show, and now we will evolve into episode 26. We'll call it. If I'm wrong, we'll fix it later. But 26 of Charts and Checks, where we're going to go over. Great segue, actually. Uber, Micron, and Palo Alto Go ahead.
Yeah, and by the way, Uber is a stock that is inversely correlated relative to Tesla.
It sometimes goes that way. Right.
Yeah.
And I think we're going to just cover cyber kind of in general. We'll probably do Palo Alto because I think more people that watch this show or listen to this show are in that stock, but CrowdStrike kind of goes hand in hand. But we'll go over them from a financial, technical, and fundamental perspective. Aside from Micron, there's no new earnings, so a lot of this is going to be more narrative and fundamentally driven. But there we go. 20-some minutes in. We are your hosts, Alvaro Pereira, the Bilingual Stock Market channel. Go ahead.
No, go ahead. Finish with the introduction.
Don Foyani of the Gorilla with Glasses, and we are here. Alvaro, what question did you have for me? Go ahead.
Micron killed it.
Oh, we'll start there.
Absolutely killed it.
Fine with me. Yeah,
I mean, they
we'll
killed
start
it.
there.
So yesterday, with the guys of the Patreon in Spanish, I purchased 50 shares of Micron 15 minutes before the closing bell. I was not sure, not completely sure, that I never speak in, I never neither speak or think in absolute terms about the markets, but I was feeling a high conviction that they were going to report better than expected. We ended up making some good bucks out of the trade, but I never expected what they actually reported, bro. I mean, the report was insane. So they have guided way beyond what was being expected. They easily beat on revenue and EPS. So if you're talking about an AI bubble after seeing Micron's report,
Yes.
I mean, that's a very aggressive thought. Let's just put it that way. So the demand is insanely high, and of course, something could happen at any moment out there, and maybe the demand starts to slow down significantly. But as of now, the demand for anything AI related is through the roof. And if you take a look at the earnings reports of Broadcom, Nvidia, Micron, it is very difficult, at least from my perspective, it'll be an AI bear. So you can be a bear on a certain theme, let's just put it that way, right? Mm-hmm. Like Oracle and the circle of revenue and stuff like that. So I get it, that's okay. But the demand is there, man. So I don't see this demand slowing down anytime soon, unless, as we always say, Dan, unless something unexpected happens. The economy breaks, we have a liquidity issue or something like that. But
something extraneous, something
Correct.
that no one can see coming.
Correct.
Yeah, name your favorite shade of gray or black swan. I was listening. Sorry if I wasn't looking. I actually was. I wanted to add this to what you were saying. Let me just share this. I couldn't find the article from Reuters. I know it's been reported there, but this is good enough. Basically, the RAM that Micron sells, DRAM or digital RAM, it's used in the high bandwidth computing necessary for AI, NVIDIA's chips, etc. It's also in a lot of smartphones. So much so that Samsung, they're a huge company, everyone knows. Mm-hmm. Their Galaxy division tried to get a year-long contract for RAM chips for their phones, and Samsung rejected it. They basically said that RAM prices are so high and the market is so volatile, we don't feel comfortable locking in a one-year contract with ourselves because we think the prices may continue to go exponentially higher. There might be that is how tight the demand is.
So this is insane,
for RAM right now.
This is like some sort of branch inside Samsung.
So Samsung, the big company, they have a semiconductor division and their Galaxy division for their phones. Galaxy contacted Samsung Semi and said, hey, we'd like a year-long contract for our RAM chips that are required for the phone.
That's insane, man. Unbelievable.
Semi's like, yo, the prices are too crazy. I know that we're partners, but I can't do a year. We can do quarterly. I have a feeling that since then this has been resolved. I think they figured it out. But it goes to show you that the demand for DRAM, for the sticks of memory that Micron, because Micron is making the same similar product, is so high. Mm-hmm. Yes, it's so high that even in an internal company where the goal should be to maximize profit everywhere for all shareholders, there's been internal decision making that they'd rather have the consumer side suffer because you can send the chips somewhere else at a higher margin. It's crazy, the demand.
And that's why they have guided way beyond expectations. So here's
the thing. This is the only bear case for Micron right now. I hate the term super cycle. It almost never comes to fruition. It may as well be one of the four horsemen of the top. And I saw a handful of reports that were basically saying we are now in a DRAM super cycle, and I'm like, all right, I'm out. Once someone starts talking about a super cycle, that's when people are far too bullish. So I think maybe you're at a temporary top in bullishness that could give you an opportunity to get into Micron if it takes a dip. But it's tough because now there's no case to be made that people aren't optimistic on this particular part of the AI theme.
take a look at the revenue growth expectations. So for 2026, 50%, 2027, 16%,
It's
2028,
crazy.
6%.
And then it goes negative
Correct. So do you think that
or flat.
analysts are being like, I don't know, too, pessimistic here? So seeing revenue or forecasting that revenue will decrease in a significant way from 2027 and on?
Yeah, I think it's. Here's the thing. I'm not a chips analyst, and this is where it starts getting very difficult because Micron, for a very long time, has had a contract where their DRAM sticks go on a majority of the, I think, the Blackwells and the Hoppers, and maybe they have contracts for the Rubens. So as long as NVIDIA keeps selling chips, you can expect Micron's growth to continue. However, again, this isn't saying anything new. If people stop buying chips to this the same degree they have been, there's no way that Micron's going to make their number. But I suppose that's the bear case for the entire story, right? That's not additive.
Yeah. And get this done. Forward P ratio 7. It trades at 7 times forward earnings, and we have a price to sales of 6.
So Micron,
it trades at 6 times.
It's confusing.
I mean, the valuation seems to be very, very cheap, right? Very reasonable. I mean, it trades at. I mean, we can say maybe only right, trailing revenue, 6 times trailing revenue.
I don't know how familiar people are with the issue of double ordering. Sometimes consumers or what's the word?
Did they say anything? I don't know if you happen to know this about backlog. Or they
I didn't see that.
The revenue guidance was way above estimates, so I guess that they have a lot of new order spending. Let's just put it that way. It's
right.
It's more likely the case. And take a look at this, bro. I mean, this used to be a cyclical company. Year over year revenue growth came in at 56%. Unbelievable. So we're talking about 3 consecutive quarters of year-over-year revenue growth. And take a look at the exponential growth of Micron's revenue. So this is what I don't understand when so many people talk about a bubble, an AI bubble, just for the sake of it. So take a look at this revenue growth. So obviously, Dan, this is not one single company that is being able to grow revenue at this velocity. We're talking about a lot of companies: NVIDIA, Broadcom, Micron.
I agree with you. We've been saying this for a while. The bubble talk is nonsense. But something I want to point out to you about this revenue, this quarterly revenue chart you have here. It's not like steady eddy and then an exponential raise and then steady eddy and then exponential raise. This is a bit of a roller coaster. By definition, you are looking at a cyclical business. So if you're pessimistic, then you believe that eventually you're going to see another, dip down. It might not go all the way back down to sub 5 billion, but you're basically just making you would make the argument that this is just a cyclical boom in Micron. And that,
just like they said in the case of NVIDIA 3 years ago, that is the issue then.
I think these are different things.
No, I get it. But 3 years ago, when NVIDIA started to do, up guide and up guide and up guide and up guide when reporting earnings, everyone was saying, myself included probably, I remember back in 2023, okay, this is the very last quarter that NVIDIA killed.
Yeah, the last good quarter, right.
This is the last good quarter. Then, on the upcoming quarter, the stock is going down. And it's, it's been 3 years. That's what I told Nathan last week in New York City. Like, bro, we've been talking about a top, and for NVIDIA, or a top, when it comes to the demand for their chips and their, software and all the NVIDIA ecosystem during 3 years. And the company keeps up-guiding and up-guiding and up-guiding and up-guiding. So I am not risking, calling a top over here. The top could be just around the corner. You never know. We never know about this, but I am not brave enough, to become bearish on AI, like a lot of people out there, I guess, based on the fact that these companies will not be able to keep growing at this pace. They keep doing it. So I don't know.
I think that's a really astute analysis. Like I love the fact that you're like, listen, it's been happening for 3 years. You've been wrong for 3 years. Eventually, you'll probably be right. But will you be right in a month, or will you be right in 10 years? Who knows? There's a lot of variability there. I guess the point I would make about what you said, like you said, NVIDIA keeps proving people wrong. Of course they do. But this is the issue that I have with using NVIDIA as the sort of line of demarcation. There's only one NVIDIA. It is the exception that proves there is a rule. That's not to say that Micron can't ride its coattails. So as long as NVIDIA continues to perform on a fundamental financial perspective, that Micron won't as well. I'm just trying to say that we can't, I would say, now, not that we can't, it would be unwise to say, well, NVIDIA's done it. Listen, man, NVIDIA's literally won it. It's once in a generation. You're not, it's arguably the best stock the world's ever seen, assuming it doesn't end horrifically. So I just have a hard time giving Micron NVIDIA's doing it pass, because I wouldn't give any company the NVIDIA's doing it pass. NVIDIA is very specific. It's one of one.
Yeah, but I think, and probably the technical charts can...
Dude, I'm looking at the technical chart. Yeah, dude, for sure.
So this is the technical chart of Micron. So so the situation that we've had so far is that these companies pull back after having reported better than expected, and the dips get bought up. So far that's been the case, because as of now we've seen Broadcom and NVIDIA going down a lot and stuff. So we haven't gotten any tangible evidence that the demand is about to top for anything AI related. So in my opinion, these dips will keep getting bought up, because we haven't gotten an earnings supporting which NVIDIA says otherwise. Like, hey guys, I am maybe down guiding here, because revenue might not keep growing at the pace that it's been doing it during the last years. So I don't see any evidence that the top is even close. So I don't know. Yeah, maybe Micron can drop down to $235. Maybe pay a visit down to the 50 DMA. I don't know. Maybe NVIDIA can go down to the 200-day moving average. We were talking about the 200 DMA last week. It can happen. I think that until we get proof or a more solid proof that the top for the demand of the services and the products that these companies are manufacturing is getting closer, that the top is in when it comes to the demand, most of these dips will end up being by the deep opportunities, in my opinion. Go ahead, Dan. Sorry.
No. That was perfect. I didn't want to interrupt you, because you were going through it and going through it well. I actually think what's more likely, Alvaro, is not that we see a top, and this top, short-term top. Mm-hmm. I don't think we'd see a top because people or because the ordering lays off. I think we see a top because these companies tell us they can't meet the demand. In other words, we get excited because we think that they're going to be able to meet their demand. We think they're going to be able to keep sending these orders, but they're going to come out and say, hey, we have all these orders, but based on our current manufacturing capabilities, we are going to need 5 years to fill them instead of 3. And I think that's probably a greater risk. It's too many orders, not too few.
But get this, brother. So I don't know what was the reason for this. So
this is NVIDIA, right?
Correct. This is NVIDIA. So in June of 2024, the stock went down 40%. Everyone probably got bearish about NVIDIA. Oh, this is a top. NVIDIA, NVIDIA's a bubble, whatever. The stock went down 40% for no good reason. The company has been killing it 2 years after that. Then afterwards, in January of 2025, I think this was the DeepSeek drop. The stock went down 44% or 40%.
Yep, great buying opportunity.
And the dips ended up being bought up. Nothing wrong was going on in the, back in 2024 for NVIDIA. Nothing wrong was going on for NVIDIA in early 2025. And now we don't know if that is going to be the case. Maybe maybe the top is in now and the stock is going to go down 50%. But so the evidence, the most recent evidence of what has happened with NVIDIA is telling us that these dips are nothing but buy the dip opportunities. And Jensen Huang, which is the gentleman that is behind this company, keeps repeating the same. The demand is out there. We cannot keep up with the demand. So, I mean...
Right. There's a difference between can't keep up with the demand and literally can't fill the orders. We're
Correct.
not at can't fill the orders yet, and if you want to see what it looks like when that happens, you can look at CoreWeave, because that's what happened to them.
Yeah, I mean, this is CoreWeave is like a whole different story.
I think I saw it close around 66, 67, whatever.
This is down like 60%, but in the case of CoreWeave, I mean, the whole OpenAI combo has been under a lot of pressure, like Microsoft and CoreWeave.
Well, this is an NVIDIA company. This is an NVIDIA company.
You can put it that way, but this is a non-profitable company.
They run NVIDIA chips. That's what they do.
But do you think that this is the reason why NVIDIA is down?
No. I'm saying that CoreWeave is basically just a data center that's using NVIDIA chips and is, 40% funded by Microsoft business.
And on the last earnings report, they were talking about constraints. Yeah, you're right about that. I forgot about that.
They said they didn't have enough. I think they're like physical data centers was the constraint, and you can't just make more of those overnight.
Correct. Yeah, so that could have a negative effect on revenue, of course. Yeah.
Hold on, Alvaro. You are right about one thing. This is technically part of the OpenAI combo. I just said it, and then it clicked in my mind. I think like a plurality or the smallest majority, like their 40-ish% of their revenue is Microsoft, and Microsoft obviously is attached to OpenAI. Correct. So that's fair too. That's fair too.
Correct. Exactly.
Yeah.
So in the case of Micron,
yes, let's wrap up on that.
Yeah, from a strict technical standpoint, I mean the chart looks very good. We were trading Micron today, in and out, on both patrons in English and Spanish. Can it go down further here? Because we saw a bit of profit taken here. Yeah, it could pay a visit down to the on 5 and the 20 DMA. Both moving averages are coinciding at $237, $237. You see previous level of resistance, as you guys can see over here. Say that 237 breaks to the downside. Take a look at this upward sloping 50-day moving average in green. It's $124. So these are potential levels of interest for a bounce. But I don't know. The report was very good. Maybe the downside potential is limited, but at the end of the day, we don't know because the AI trade has turned sour. So I would still be interested in buying the dip on Micron unless this 50 DMA breaks to the downside. As I just said, like $227. Other than that, the chart looks very good. I wouldn't be surprised if we see Micron bursting above all-time highs, $163, and keep going up. This is a very good-looking chart, and they just reported a way better than expected, or they released a way better than expected earnings report, and maybe the risk could be to the upside. Who knows?
I don't disagree at all. It's hard though because I thought Broadcom's report was really good, and then it had one bad day that turned into 3 bad days. I have a feeling that Micron probably needs to retest some of these averages as well, just because everyone else is. But to your point, their quarter was fantastic, and I think if you look at it like on a percentage basis, probably more compelling than the others, which is fair. It's smaller, and then these chips. It's a different business entirely.
Correct. There you go.
Yeah.
So
let's go ahead and we'll move on to Sorry, do you want to say one more thing?
No, I'm good.
All right, let's go ahead and move on to Uber, since we talked about Tesla in the open here. It's recently come under. It's come under a lot of fire. I'll just pull up a quick little. I'll pull up a weekly. I'll pull up a weekly chart. One of my favorites, the 2-year weekly view.
Awesome.
Let me grab it. Window. Here we go. In blue is the 50-week moving average. In orange is the 100-week moving average, and in red is the 200-week moving average. It lost the 100-week last week. It looks like it's going to close this week above the 100-week, so it's kind of sandwiched in between there. In the past, it's been, this is a 2-year, but I go back 5 years. You don't get a lot of additional information because, it bottomed in July 22 and has been on a pretty steady uptrend since. The recent news, in my opinion, or not recent news, the recent downtrend, in my opinion, has to do with a lot of the news flow that Waymo is picking up share and that it just isn't going to be as the partnership between Uber and Waymo is going to be more competitive than collaborative. I'm not sure if I agree with that sentiment necessarily, but right now I could understand if the market wanted to take some chips off the table. I mean, look at this 5-year chart. It's been an absolute monster for people. So I get it.
Would you be a buyer of this dip?
If it
This is
holds
a high quality
100 week,
company, pretty much a monopoly. But yeah, there are concerns about competition, Waymo and Tesla. I mean, I don't see how anyone would think that Tesla is going to be competing with Uber or whatever. I mean, let's just put it that way.
it's
It is
definitely
what it
more
is.
of a Waymo thing. I think that Uber successfully retorted all of the doubters that were saying Tesla and robotaxi was going to be an issue. I think this recent fresh, let's just call it flush of negativity, has to do with Waymo potentially ramping faster than previously anticipated. That's kind of all I have on this. We talked about a little bit about it with NVIDIA when you were going through all of the declines it had and the financials hadn't changed. In fact, they were improving. There's no financial change to Uber that explains the current drawdown in the stock.
Yeah, it's in a technical bear market, brother. 21% of the highs.
Yeah, and if just from a technical perspective, from a longer term view, you want to see it hold 75. It's kind of been at an inflection point. And that is below the 100-week simple moving average, but I wouldn't buy this until it finds support.
Yeah, I would
at
wait
the
until
100 week.
buyers show up and can potentially show a bit of a strength. So I would rather doing something here if Uber captures this decline in 5-day moving average, $81.30. So a very ugly looking short on a high quality company that has been doing everything the right way. So I am not a trader or a buyer for the most part of downtrending stocks. This could be on my exception list, but to be honest with you.
This is a really nice company. If this continues to draw down, I'll definitely end up buying more. It's just right now the stock can't seem to catch a break. And it every time it looks like it's going to find support, it just really can't quite keep it. And until the cutting board shows up, it's a falling knife.
Yeah, so say that Santa doesn't come to town and the markets keep dropping and stuff. This could be a very interesting candidate for the January effect. So in the case of the January effect, we have a situation in which most market participants or institutions, let's just put it that way, buy stocks that underperform the markets during the last 2 or 3 months of the year. So this could be a very interesting candidate. It would be a beneficiary of the January effect. So say that, I don't know, say that the stock, I'm not going to say that it keeps going down. Maybe it doesn't. Maybe it does. I mean, the technical chart, take a look. Lower,
doesn't look great,
lower
dude,
highs,
yeah.
lower lows. It doesn't look good at all. I mean, more downside could be in the cards. But say that Uber opens or starts trading in 2026, 20-25% of the highs. I think that this could be a very, again, interesting candidate for the in order to be a potential beneficiary of the January effect. So this would be on my January effect candidate list. Let's just put it that way. High quality company. I think this is an overreaction. So, and I think this is an overreaction because Uber is killing it all over the place. But I agree. It is all about the future. But on top of that, we have a lot of valuation support. So the stock has a very, I would say, compelling valuation. Sure. So I like it. I don't like the technical chart, but I do like the stock.
And that's what makes investing in names like this difficult, because it's hard to pinpoint exactly what made the market turn sour on the story. You can kind of take a look around the market. You see Google has obviously done so well, and you see the headlines about Waymo. You can craft a narrative to match the price that indicates that there's some concern that they're ramping up faster than the market may have previously expected. But I remember when every other day we got some sort of headline about the robo-taxi was going to take their share and eat their lunch and blah, 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 blah. It never came to fruition. But I mean, the stock declined during that period despite the fact there was no change to their fundamental performance. This is something you got to ride out. The company's fine. Just got to wait for buyers to step in because this stock can keep going down.
Take a look at this revenue growth. Tremendous.
Oh, yeah, dude.
tremendous. So, and not only revenue is growing on a sequential base, in a very noticeable way. So we're talking about 3 consecutive quarters of year-over-year revenue growth. Net income, what is the net income looking like? $6.6 billion on net income. Pretty much, net income is pretty much at all-time highs. And get this done. Take a look at this. And again, it all comes down at the end of the day. When it comes to the short term, we only should be looking at the technical charts.
Right.
But so price to sales ratio 3, unbelievable. This is a growth machine.
Yeah.
It trades at 3 times trailing revenue. Take a look at the forward then. 23.
Yeah, it's just going down, dude. Yeah, no, I mean, it's a great.
We have a brutal multiple compression here. So maybe the markets are right, Dan. Maybe this is the end for Uber and Tesla. Tesla is going.
Well,
I think
the threat is Waymo. I think the threat is Waymo.
But let's talk about the worst case scenario. So Tesla and Waymo will be taking over. Okay. So if you believe that, then of course you will not be paying this company, a forward P of 23 or a price to sales of 3. But
you'd believe the growth
if the markets are even slightly mistaken about the potential competition from Waymo and Tesla, this is a screaming buy the dip opportunity. This company is trading at 23 times earnings after having posted on its last quarter a net income of $6.6 billion. We have a revenue growth way above 20% on a year-over-year basis. The valuation is extremely compelling. And unless you are a super Uber bear because of Waymo and Tesla or whatever it is, you're buying this company at these levels.
I have nothing to add. Yeah, very well done.
Yeah, impressive.
And the only just to finish off, dude. The only thing I would add, man, the competitive threats to Uber always seem greater when their competitor stocks are doing well. So if the glow of Google and Tesla wear off, I think all of a sudden you start seeing Uber firm up quite a bit. So that's something to consider as well. It's kind of like they're kind of like battleground.
And at the end, it doesn't have to be a zero-sum game, bro. So
and I don't think it is.
Waymo doing well, Uber doing well, and Tesla, I don't know, selling the Optimus Prime.
Sure.
No. But again, so the current multiples that Uber is trading at is pretty much discounting that this company's done. It's the end. Forget it.
23 times forward is not the end of the world.
But the company's killing it.
No, the company is great. I would add this too because I'm
talking about the multiples relative to its own history. Super cheap.
Of course.
Super cheap.
Sure. I think what's funny to me, I should mention it because I mentioned it when we mentioned it about Tesla. You do have Uber One. That's $10 a month or $100 if you pay it all up front. There are people that just literally pay Uber $10 a month for the additional benefits. I think you can choose superior rides. I think you maybe get a little bit of benefits on your groceries, which is another differentiating factor. There are people that use Uber Eats to order out or to order in things, whatever you want to say that.
Super dominant
there's a lot going on there. It's not as blasé as just ride share, market share.
Correct. Agreed. Yep. So let's move on to cybersecurity.
Yeah, we'll talk about Palo Alto.
I got to be honest with you, full disclosure, I am on Palo Alto Networks, kind of playing, kind of trying to become a long-term investor.
You can do it.
It's been a very frustrating ride, bro. So my average price is at $180, and I was like, I like the company and stuff, so I'm gonna hold this for the long term. And the stock, so the initial gains that I have been making, have turned around 3 times already. So the stock goes up to $210, comes back to 180, goes back once again to $110, comes back down to $180. So I do like the company, but as of now, it hasn't worked out for me. So and since I was thinking about the long term, I was not even writing calls, so it's been a bit frustrating. I am pissed because of the Palo Alto Network situation. So,
well, I would.
Any thoughts on that?
Yes. Investing works because of compounding returns, and compounding returns take time. So you do need to be a little bit more patient.
Yeah.
And just to add to that, I mean, here, I'll just share the long-term chart here, 5-year weekly.
Go ahead, bro.
This thing has worked. You don't often get a chance to buy it at the 100 DMA.
It's a very valuable stock. Take a look at those pullbacks, bro.
It's the weekly.
Yeah,
no, it moves. It moves quite a bit. Mm-hmm. Yeah. So I'm not disputing that. But if you believe in AI and you believe in the continued relevance of the internet, cybersecurity is going to be something that no one is going to skimp on. You can't afford to skimp on it. So to me, if you're looking to become an investor or make that pivot, I think the easiest place to do it is in cybersecurity, because you know that the results are going to be there. And you know that for the next 5, 10, maybe even longer year, there's going to be a continued investment in this space. And while it is volatile, that's because there's a lot of people that are in these names and the valuations are high because so much is expected. It's not easy. It's just, this is one of the few places in the market where if I see a stock, if I see Palo Alto down 5 or Crowdstrike down 5, whatever it is, I'm like, can I afford to buy more here? Like, how big is this company in my portfolio? Because I'm that confident it's going to work out.
So, yeah, I mean, when it comes to cybersecurity, we're, for the most part, talking about CrowdStrike and Palo Alto, right? I mean, these are the dominant players in the space. We've spoken about this before. It's like so Palo Alto's valuation is more compelling than CrowdStrike, but the markets are discounting way more growth from CrowdStrike relative to Palo Alto, right? In the case of Palo Alto, I picked it because of the valuation, precisely. Because in the case of CrowdStrike, it's a tough one, bro. So the valuation of CrowdStrike is very, very expensive. So I don't have anything against the company, but from a valuation standpoint, I found Panw's valuation like more
There's nothing wrong with that. I'm just looking at the market caps right now. It looks like Palo Alto is 130 billion. CrowdStrike is 120 billion. I didn't realize that Palo Alto was a larger company from market cap. But yeah, I mean, I'll say this about CrowdStrike. It's getting to the point where I think the revenue expectations are like 50 or 60% year over year. When you are an $130 billion company, eventually that becomes completely unsustainable.
We can take a look at that. I mean, this is Palo Alto, right? Can you see this?
Yes, yeah. Palo Alto, when we last checked in, was expected 14% EPS growth for the next 3 years. So pretty close.
Yeah, 16% revenue growth, 2026, 13%, 2027, 12%, 18% in 2029. So analysts are expecting revenue growth to accelerate or to re-accelerate for 2029. I mean, this is very decent growth, you know? I mean, nothing to complain about Palo Alto here. We have analysts seeing Palo Alto 225 1 year out. So these are the bullish estimates. So neutral ones, 224. And the bearish analysts are expecting Palo Alto to be trading at around $135 12 months out. If we reconcile this information with CrowdStrike, then you know the revenue growth expectations are larger, of course. So take a look at this, brother. Wow. 23% 2026, 21% 2027, 21% 2028. 19%. This I am talking about revenue growth, of course.
Yeah. Right? Let me correct myself. I said 50%. I must have meant 30, and it's for EPS for the next 3 years. Eventually, though, this company will get so large that it won't be able to replicate that. It will be law of large numbers. But I mean, I'm really impressed with the. I mean, yeah, it's doing a lot.
Wow, take a look at the growth, brother. Unbelievable, man. Jesus
Here's the thing,
Christ.
Albert. I could understand you being upset, not upset, but frustrated with the price action of Palo Alto.
Yeah.
I think most people are. If you look at, I don't think it's done very well year to date. I'll quickly just look up.
I mean, software. I mean, there are a lot. I mean, this is a cybersecurity company, but at the end of the day, it's a software company.
So I mean, Alvaro, on January 2nd, the first trade, or January 1st, whatever, Palo Alto traded at $180 a share, and now it's at $185. It's not just people that got into it recently; it's people that got into it. It's been a tough stock to own when the growth has been what it's been.
It is. Yeah. It is a very tough stock to own. Yeah, 100%. In the case of CrowdStrike, I don't think any other cybersecurity company can show this kind of growth, right? I don't think so. This is absolutely unbelievable. Take a look.
CrowdStrike had the benefit of deciding to go down the route of a cloud platform.
How can you grow revenue on a sequential basis like this? Like not even one miss. How can you do this? So this tells you that the pricing power of this company is huge, is immense.
I mean, that's what it takes to win Le Mans.
Yeah, this is impressive.
You know?
Yeah, 100%. It is. Let me pull up here the technical chart. I don't know if you happen to have a technical chart of any of these stocks.
I showed the one for Palo Alto, I think, did I not?
Correct. Yeah, correct. So let me take a look.
Here, I could pull up another one if you want. It's not.
Yeah, let me take a look at CrowdStrike here, because this is and on top of that, CrowdStrike is a retail darling.
Oh, and speaking of CrowdStrike, I know that we said that Palo Alto year to date 2%. I think CrowdStrike year to date is more like 30%. So it's had a better year.
What do you think these cybersecurity stocks have been pulling back? If they are the future, and we
I think it's just I know this is kind of a stock answer, but I think it's just software pessimism. These names are technically software companies, and we've seen a lot of bleeding in software, and it's just pulling over. And these stocks, even Palo Alto, the valuations are not low. They are expensive companies.
These are expensive companies.
This is just out of favor. If you look back at the quality versus momentum piece I wrote a couple of days ago, quality's outperformed momentum by 6% over the last 3 months. CrowdStrike and Palo Alto, I don't think fit traditional quality factor metrics.
Gotcha. Do you think that the markets are kind of starting to be concerned about these cybersecurity companies who also be in risk of being disrupted by AI? Like what happens in the case of, Adobe and Salesforce and stuff like that?
No, because you're going to need to, all of these cybersecurity companies are not pay by seat, they're pay by usage.
Correct.
And the more that you use them, or the more that they are used, the more that they make. And I think AI, because it goes to everybody, it goes to people like me and you that pay for Gemini or ChatGPT or just use it for free, but it also goes to criminals that can use it for their own nefarious purposes. There's going to be more AI cyber attacks as AI becomes more available, and that's going to allow these companies to produce better revenue.
Yeah, in the case of CrowdStrike, this stock is 16% of the highs. Not a good-looking chart, of course, trading below.
No, it's not, and it looks like it might fill the gap. Do you see the gap?
Down to the 200 DMA.
No, zoom out.
Oh, okay. Zoom out. There you go.
Yeah, you see how it had that big earnings swing, and it looks like 9/15, September 15th. 9, not 8.
Not here?
No, move over. Do you see do you see all the green candles? The 9-15 on the thing.
Okay, hold on. But what date did you say?
9/15, September 15th.
September 15th? Okay.
Yeah, do you see that?
But this was
it's already, I guess it's already filled it. It's already filled it. So,
I already filled it.
Sorry,
this was not an earnings report. Yeah, I mean, it just shut up.
My bad.
For whatever reason. Would you be a buyer of the zip?
Hold on. Let me pull up my own chart.
I mean, if this stock recaptured the 5 DMA, the 5-day moving average is pretty much coinciding with the 20 and the 100 at $486. I mean, there could be a potential trade here to the upside with CrowdStrike and potentially being able to consolidate above $487 and maybe pushing up to the 20 DMA 20-day moving average at $504. I mean, it's possible. Now, if the bulls fail at recapturing these two moving averages, the 5 in white and the 20 in blue, I can see. I mean, and of course, especially if the markets keep pulling back, I can see a retest of these 200 DMA, this rising 200-day moving average at $455. It's in the curves, maybe.
Yep.
Not a good-looking chart, so maybe you can buy the stock because you like it. I don't know. Maybe.
Well, I mean, you definitely have to like it to buy it here. Mm-hmm. I'm looking at that. You mentioned it, the 100-day. I'd wanted to take it that. Based on my chart that I'm looking at, it opened near the 100-day.
Share it with you.
Oh, yeah. Sorry. Yeah, no problem.
All right.
So opened right around there. I'll just zoom in a little bit. 6 months, make it easier to see. It opened right below the 100-day, went up and tapped it, went down, found support at 475. And this is kind of the gap I was talking about. There was a gap here. Oh yeah, that is 919. It was a gap. It just didn't look like a gap on.
Yeah, correct.
Yeah. Anyways, this is like 460. So if you're a bull and it ends up not being able to hold 475, you look for support at 460, right at the bottom of this candle, and you really need bulls to come in, because otherwise, if you zoom out a little bit, you don't want there to be like this big. This is an elevated trading range. You don't want to fall out of it. That would be very bearish in the intermediate term.
100%.
You don't want to see the bears take Crowdstrike
and
out of that.
In the case of Palo Alto, let me pull up the technical chart. I mean, you just.
It was a longer term thing. You can show.
Yeah, but let me take a look at the short term potential. And this is a chop fest. Take a look at this. Wow. I mean, sorry, I am not sharing my screen, but let me do it quickly here. And all right, let me go. It's a chop fest. Take a look. This is a very volatile stock. It isn't looking good as of now at all. So below all the moving averages. And take a look at the way how the bulls.
This really is choppy, dude.
Yeah, take a look at how the bulls have been struggling at trying to reverse above this 5-day moving average in white. So resistance, 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 and resistance today once again. So ideally, we want to see the bulls recapturing the 5 DMA, but I mean, the issue that we have here, and the same situation goes for Uber and goes for Crowdstrike, is the fact that we have a lot of overhead supply. So we have a lot of buyers trapped all over the place. So if you buy the dip on any of these stocks, because for the most part, and aside from Tesla, I mean, all of the stocks that we've reviewed today look very ugly. From a technical standpoint, you need to keep in mind that we have a lot of overhead supply. So not giving it a shot. I mean, I still have 100 shares of Palo Alto. I would rather seeing it recapturing the 200-day moving average at $192. This would be a bit more constructive from a technical standpoint. But the stock is, let me see, this stock is 17% of the highs. This is a good company, high quality company. We both can agree on the fact that the valuation is expensive, but when it comes to cybersecurity, you have two main players, right? It's either Panw or Crowdstrike. So,
yeah, Zscaler might end up making a bid, but that stock has been in the absolute trash can. Like, it's been straight down. It looks bad.
And this is another company that is killing it. Wow, take a look at this, brother.
And the growth here is still expected to come through. I honestly have no idea why it's taken such a dive.
That's what I was asking, bro. I don't know if the markets are onto something here when it comes to cybersecurity companies, like suspecting something negative or whatever. I mean, go ahead. We've talked about this before because we've covered cybersecurity stocks before. It's like we cannot make any bearish case about these companies. So you need cybersecurity with a recession in the economy or not, or I mean. If you're running a company, this is an expense that you cannot avoid.
Yes.
Period. Full stop.
It's interesting to me because I know we're looking at it right now where these companies are declining pretty rapidly on not a lot of news, but I also want to make the point that happens quite a bit in these names. It's a feature, not a bug. And it's only so scary right now because there's so many other things going on that we have to worry about in the back of our mind, and we're trying to make connections that might not necessarily be there. These companies, you saw the EPS. We don't need to go through them all again. They're growing like weeds. These swings in the stock. They're going to be features and not bugs.
Yeah, and on top of that, and this is something that is worth pointing out. So these downtrending stocks that we covered today. I mean, all of them, Uber and Palo Alto and Crowdstrike, and now
except for Micron.
So, except for Micron and Tessie. So these are candidates for more profit taking because of tax purposes.
They are the easiest companies to sell. You probably have a lot of
loss, you take the loss, and you can ride the loss.
Or even if you have a gain, like even if you have a lot of it, and you're like, hey, I was up 25% last week, now I'm only up 7%. Screw it.
Let me lock in the profit.
Let me just take the 7%. I have some losses already locked in. It'll be even, and I can buy it back later. And to kind of end on that note, Alvaro, as for your specific situation with Palo Alto, you said 180. if you do decide to sell it, I would, and you want to be an investor, assuming you want to be an investor, if you do decide to sell it, write down the price on the downside and the upside you would buy it back at, so you get back in somewhere.
Correct.
I think it's okay to sell.
It's a small position for me. It's only 100 shares. I like the company. So, I mean, there's nothing wrong going on as of now with Panw. So all of these cybersecurity stocks are getting decimated. So I'm waiting. And so if these stocks do not pull up or maybe keep going down, they are also strong candidates for a potential January effect.
Yes. And I also wanted, I totally agree. They're definitely, if these stocks keep going down, I think eventually people wake up in January and they look at where they want to allocate new money. I think they're very easy candidates. But the strategy I outlined for you is really something I did for myself. I had a couple of new accounts or newer accounts where my cost basis on Uber was only 75, 77, so towards the higher end of the range. When I can't remember which moving average it lost, but I sold the Uber position in those portfolios around $80 and only a $5 a share gain, so really nothing. But I wrote down the price to the downside and the price to the upside I will buy the Uber position back at because I want to be invested. But when you're in a volatile market situation like this and you're seeing a company or a stock like Uber doing what it's doing, you need to, when you're in the position like mine, managing money the way you're managing, your first goal is to protect capital and not to grow it.
Yeah, correct.
So that's the decision I made. I don't know if that's suitable for other people listening, but I just wanted to illustrate that the strategy I laid out is something it's more about defending capital than it is growing it, because you are taking your risk off the table. You are locking in a profit. And you're telling yourself that if it goes down further, we'll go back in. But if it goes up, I'm willing to miss the first 5% higher, but I'll get in then because I'll think that's all I'm trying to do.
Yeah, you're acting as a fiduciary, so it's good, man. Yeah, 100%.
Yes, that's how we do it.
Well, I think that's a wrap, bro.
I think that's a fantastic way to end it.
And so, we should be doing the pod next week. So we have Christmas.
You want to do it next week? Let's do it.
Maybe
should
on Tuesday or something like that. Otherwise, we need to say, Merry Christmas to
yes.
everyone is in Christmas mode as of now. So
I think it makes sense to do it on Monday or Tuesday because there's no shot it's happening.
Yeah.
So okay.
Headed back. I just said that you were headed back to Ohio, right?
Yeah, I'll be back in Cleveland Monday night.
All right.
And I'll be there or Sunday night, and I'll be there until the next Sunday. So we'll do something on the 22nd or the 23rd. But if not, thank you all for tuning in. Merry Christmas. Check all those description boxes below. You'll see links to Alvaro's Discord where you'll find me hanging out and a whole bunch of other hit makers hanging out. Lots of money gets made on there on a daily basis. You're missing out if you're not in there. You'll find a link to my blog. You'll also see a video up for me tomorrow. I'm just going to kind of briefly talk about some of the stuff we did today or that we've seen this week. And I think that's a wrap on episode number 25 of Charts and Checks.
You guys enjoy the rest of your day, and I don't know, go grab a beer. It's Christmas.
Go grab a beer.
Christmas is just around the corner.
Goodbye, everybody. Happy
care,
holidays.
bye.
Take care.